In this video, I'm going to walk you through your HOA fee and what's included there at Crescent Cove. Additionally, I'm going to give you two big takeaways. One is essentially how appreciation is always on an upward trend, even though the market goes up and down. More on that in a minute. And then finally, how a solid HOA actually protects your appreciation on the back end of your home's resale. So most people are up in arms about HOA fees and having an HOA, and they're enforcing the rules and all this sort of thing. But honestly, for many Americans, their primary home is one of the primary wealth builders of their life. So you really do want an HOA protecting your home's value so that you can resell it for top dollar. More on this in the video. I don't want to hold us up. I am going to give you a quick little story about an issue I had in my own neighborhood. But hit that like button, hit that subscribe button, and let's get into the video now. If you're thinking about buying a new construction home in Myrtle Beach, South Carolina, this video could completely change where and how you buy. Purchasing new construction is all about the deal, and having a solid buyer's broker could be the difference in you building wealth with many of your fellow Americans or making a decision that costs you thousands from day one. Because not all new communities are the same. Builder incentives vary, financing options differ, some neighborhoods hold value better than others, and the amenities that actually matter to everyday homeowners can change from one community to the next. In this series, we're taking you inside new construction communities across Myrtle Beach and the Grand Strand, from coastal neighborhoods to fast-growing inland areas, so you can see how they really compare before you make a decision. We'll break down builder incentives, lot purchase and resale strategy, new construction versus resale comparables, and work through your floor plan resale potential. Not only will you see the out-of-pocket expenses to purchase the property, but you'll also get a full breakdown of your first year annual home expenses. We'll take a tour of the on-site amenities, and I'll show you local points of interest that will impact your daily life, like schools, shopping, golf, restaurants, grocery stores, medical, and even highway infrastructure. But we're not just talking about this from a desk. You'll hear directly from on-site sales agents inside each community as I interview them as your buyer's broker, paired with on-location video so you can actually see the homes, feel the neighborhood, and understand the pace and personality of each area. We'll compare communities side by side in each area so that you can see how this community stacks up against the rest of the market, and decide if you can get a better deal elsewhere or if the premium you're paying is really worth the cost. Remember, the biggest wealth builder many Americans have is their primary home. And I'll help you size up this deal to ensure that you'll be able to resell this new construction home, keeping hard-earned money for you and your loved ones. Whether you're a first-time buyer, VA and FHA buyer, growing family, upsizer, newlywed couple, second home buyer, investor looking for a stable new construction rental property, or a retiree, I'll help you find the best community that meets not only your needs, but also positions you for long-term value and resale. By the end of this video, you won't just know what's being built, you'll understand why some communities stand out, which ones fit your budget and lifestyle, and where buyers are getting the most value today so that they can make the most at resale. So whether you're relocating, upgrading, downsizing, buying your first home, or planning for the future here in Myrtle Beach, this series will give you the clarity and confidence to make a smart move. All right, guys, let's get into Crescent Cove HOA fees. Now, the HOA dues are $105 per month. Please note, HOA dues will be adjusted once amenities are open. Obviously, it's going to cost more to run those amenities and take care of them, so that's most likely going up, that HOA fee. Now, included, trash pickup. Your trash pickup is included. You don't have to call a separate trash company to come and pick your trash up. When you pay your monthly HOA fee, they're going to come and pick your trash up for you. Bulk package with Spectrum with 500 Mbps internet and 175 plus channels and 2 TV boxes. Super cool. That's also included in your HOA fee. Your one-time fees at closing, there's a proposed one-time capital contribution fee of $120. And then there's also an HOA admin setup fee for $100. So when you close on your property, you should see on your closing statement, a total of $220 there. Now, there's a quick note here. Future waterfront amenities. There's going to be a boat ramp and community day dock for residents. Planned community swimming pool and pavilion. Planned playground, dog park, and pickleball courts. Boy, those pickleball courts have become popular in our area. It's a big time fad right now. Everybody's playing pickleball. Now, all this said, guys, I want to talk to you about HOAs because a lot of people are up in arms about HOAs. A lot of people that are not from the South that don't deal with HOAs, they're all leery of HOAs. There are tons of HOA horror stories, and I am going to share my own story-ish. Anyways, but I want to talk to you about how to think about HOAs because for many Americans, their home is the primary and number one wealth building purchase they make of their life. So buying the home correctly is huge. It's absolutely huge. If you buy it correctly and you buy the lot correctly, well, guess what? It appreciates in value. If you time the market just right, boom, you end up making a really good chunk of change on your primary home when you go to upsize and buy a larger one or downsize. Now, all that being said, let's first talk about appreciation. In real estate, property is always appreciating on an upward trend. Now, let's kind of break down what that means. The market goes up and down. Yes, there are times when the market is up. Yes, there are times when the market is down. Obviously, if you sell at a time when the market is down, you haven't timed the market right and you're not getting as much money as you could on the sale of your home. If you sell when the market's up and it's higher than the price you paid for your property, you stand to make appreciation. That's the goal. That's the aim. Now, what does it mean that appreciation's always on an upward trend? Ultimately, what that means is if you wait long enough, it's going to continue going up. So even if the market drops down some, you just keep waiting and it will recover and always go back up to more than what you paid for the property, given enough time. Property is always on an upward trend. It always appreciates on an upward trend. It's that simple and that easy. Now, second thing I want you to think about is this. So the lesson is time the market. Time when you sell that property. Make sure you sell it when it's way up. Now, number two, HOAs. What does appreciation and HOAs have to do with how much money I make selling my home? Well, a solid HOA makes value-added decisions. They keep the pool up. They stop people from working on rusted vehicles in the yard and leaving vehicles and stuff in the front yard. They stop you from having a dirty yard. They stop you from putting up fences that don't look good. They have a little bit of uniformity that they keep to the neighborhood. All of this protects how well your property appreciates. And when you go to sell it, even though you were aggravated, some people might be aggravated by what the HOA says or what they do or how strict they are. When you go to sell that property, you'll be really happy about it because you should be able to maximize the value, the resale value of that property. So a solid HOA is always going to protect appreciation on the back end of that property. And if you look at it from an investing standpoint, you want somebody that is making the tough calls and enforcing the rules so that the neighborhood doesn't become the wild, wild west and you don't lose money trying to sell your home in a neighborhood that's ran down and gone downhill. So instead of being all upset about an HOA, be happy about the HOA and how it's protecting your money on your home's value in the future. Timing the market matters just as much as picking the home. Understanding end of quarter and end of year builder pressure, knowing when to target inventory homes versus to be built opportunities, and recognizing early phase versus late phase pricing can dramatically change your outcome. I believe financing is where deals are truly won or lost. Interest rate differences, temporary versus permanent buy downs, choosing the right loan type like VA, FHA, or conventional, and knowing when to use lender credits versus builder lender incentives can impact your payment for more than the purchase price. I believe when all of these elements are aligned correctly, you're not just buying a home, you're engineering a deal that works for you on day one and positions you to win again at resale. If you're still early in the process, start by watching a few more of these community breakdowns. Then when you're ready, we'll build your strategy together. And if you want to make sure you're not overpaying, missing incentives, or choosing the wrong community, reach out. I'll help you compare the entire market and structure a deal that works for you and not the builder. Call me now at 843-360-1737 and let's map out your strategy the right way. Now guys, recently in my neighborhood, the trash lid was up on our trash can. So in other words, the trash had stacked up so much in the trash can that the lid was cracked open. And we got a letter talking about they're going to give us a fee if our trash can lid was open, which is kind of aggravating. Now, that's the kind of stuff that happens with some HOAs. Absolutely. Now, that letter wasn't from the actual HOA. It was actually from the trash company that we hired, saying that they're going to charge us a higher fee if our trash can lid is open on our trash can when they come and pick it up. Anyways, now, I'm not even going to get into that, but that is the kind of stuff you hear from HOAs. Oh, your grass is too long. Oh, you need to paint your mailbox, all this kind of stuff. Sometimes it's petty and it goes too far. Obviously, nobody wants to deal with somebody being petty. At the same token, there is a lot of value with a solid HOA. Here's a surprising secret that a lot of you probably don't know, coming from non-HOA communities. In the state of South Carolina, if you do not pay your HOA fees, they can foreclose on your home. Yes, you heard me correctly. If you're in an HOA and you're not paying your fees, they can foreclose on your home. So whatever happens, be sure to pay your HOA dues. I believe without independent representation, buyers don't compare other communities that may offer better value, miss opportunities with stronger incentives or better timing, and often accept default structures on financing, upgrades, or lot premiums that may not serve them long term. I believe most buyers are guided to focus on the home itself, when the real decision should be about resale, long-term value, and how the deal is structured from day one. I believe when you have the right broker in your corner, you're not just choosing a home. You're comparing the entire market, structuring the deal strategically, and positioning yourself to win both now at purchase and when you sell. Before you make a decision, let's run your deal the right way. Compare incentives, financing options, and timing across multiple communities so you know exactly where you stand. And even if you're already talking to a builder, it's worth getting a second opinion because small changes in structure can mean thousands of dollars in difference. Call me now at 843-360-1737 and let's break down your deal the right way before you move forward. I cannot wait to talk about top new construction builder incentives in Myrtle Beach, South Carolina. Now, let's jump right into it. DR Horton, we've got paid closing costs between $6,000 and $12,000. Always, it depends on the deal. It depends on the timing. Is the property built already? Is the property under construction? Those are some of the factors that you're going to see at play here between your interest rate and your closing costs. So a home that's already constructed, you're going to get a better deal on. They want to move that fast. A home that has to be built from the ground up, well, you're probably not going to get as good of a deal. Now, there's a range there. Paid closing costs, $6,000 to $12,000. Interest rate starts as low as 3.99%, going up to that plus or minus stands for the current market rate. Now, there are no other incentives that I'm aware of after interviewing and talking with D.R. Horton reps. Now, Pulte homes, $10,000 to $14,000 in paid closing costs, 3.99% interest to the going rate. Now, other incentives is between $20,000 and $40,000 off the ask price. I cannot wait to dig deeper and unlock some insights for you here on these builder incentives. Now, Mungo Homes, you've got $3,500 to $5,000 in paid closing costs. Your interest rate starts at a 4.99 to the going market rate. They are higher on the interest rate than both D.R. Horton and Pulte. That's Mungo Homes. And then there were no other incentives with Mungo Homes. Now, finally, we've got Meritage Homes. We've got paid closing costs to the tune of $5,000. Your interest rate as low as 4.99% to the going market rate. And they do free appliances, which I thought was really, really cool. They take care of all your appliances to include your washer and dryer. Yeah, not bad. Now, let's dig in and go a little bit deeper. Number one, don't chase the rate alone. Look at the total incentive value. We got multiple builders offering as low as 3.99% interest rates. So rate is becoming less of a differentiator between the new construction builders. The real spread is in your closing cost, it's in your price reductions, and the other incentives or extras that you can pull off in your deal. The takeaway here is that a 3.99% interest rate is great, but if one builder is giving you $30,000 off the price, that often beats a slightly better long-term rate. Now, number two, Pulte is hands down the most aggressive equity play on the table. $10,000 to $14,000 in closing costs, $20,000 to $40,000 off the ask price. This is the only builder here creating instant equity at purchase. Now, what this means for you as a buyer is it's going to have the lower loan amount. It's going to be better. You're going to have better refinance flexibility later, and there's going to be stronger resale positioning. Now, the investor angle here is this is the closest thing to a buying below the market that you're going to find in new construction. I like this play a lot, if I'm honest with you. Out of all of these builders, me personally, I think you're getting the best deal here. Plus, they seem to be a pretty, they're more of a custom builder, which, if you've seen the videos, if you haven't seen the videos, you need to watch the videos and learn the differences between the different builders in our market. I think Pulte is winning on the deal, though. Now, number three, D.R. Horton is the best cash to close play. So for those of you with less money in your account and you're going to be tight bringing cash to the table, you might want to go with the D.R. Horton home. $6,000 to $12,000 in closing cost is huge. Competitive at that 3.99% rate. There's no flashy extras, but the takeaway is that it's a clean, simple, predictable deal. It's strong for buyers who want the lowest out-of-pocket upfront expenses. They want stable financing, but they have no need for added value beyond just the basics. If you want to come out of pocket with the least amount of money, D.R. Horton's your builder. Now, Mungo and Meritage, this is the middle ground, but weaker financially. It's not going to be the best deal. It's low closing cost. It's got a higher rate at 4.99%, and there's no extras. In my opinion, this is the weakest overall financial package on the table. Now, could one of these homes be the best value for you? Absolutely. If you find a lot of value in the product line that Mungo or Meritage produces, even though the numbers don't work out well for you, it might still be the best value for you. And those are things that we have to dive in and work through, the personal use value versus the financial deal, and kind of find out where your priorities are. If it's more important for you to get a perceived value that you have in a Meritage or a Mungo home, then it still might be a win for you, even though it's not the best deal. If you're more financially minded and your goals are more financial, or perhaps you don't have as much money to come out of pocket, a variety of factors, but if your priorities are more on the financial side, then Mungo and Meritage probably are out of the game for you. Now, Meritage, we've got a flat $5,000 closing rate with a 4.99% interest rate. We've got free appliances. Now the appliances feel good emotionally for sure, but financially that's maybe $3,000 to $6,000 worth of value. You're effectively paying more monthly for a cosmetic perk. Let's call it what it is. Now, the hidden truth, builders are incentivizing differently based on strategy. Pulte, they're here to move inventory and discount that price. D.R. Horton keeps their pricing firm, but they support financing. And then Mungo and Meritage, minimal incentives. They rely on the product brand. The takeaway for buyers is you're not just choosing a house, you're choosing a builder's business strategy. You got to see it for what it is. Now, the smart buyer strategy, and this is where we really need to dig in. When you're comparing communities, your buyers should ask, what am I getting in exchange for the price I'm paying? And guys, I try to drive this home in my videos, which is why we compare different builders. It's why we look at resale value versus new construction. It's why we look at comparables. It's why we go in and say, all right, in this community, I'm getting a larger lot and better privacy, and I'm paying a little bit of premium compared to the rest of the market. But in this community, I'm not paying a premium. I don't have a larger lot. And then maybe as a buyer, you don't even care about a larger lot. Well, then it might be good for you to go with a lower tier new construction builder as opposed to a higher tier, because what you're paying for is worth it for you or not worth it for you. So you've got to always ask yourself, what am I getting in exchange for the price I'm paying? And so when you walk into a new construction community, you see that asking price, but we dig in deeper and look at things on a price per square foot basis and compare your home to the rest of the market so you can see where it sits and see if that premium is worth it. That's one of the things you've got to do. It's why you hire a solid buyer's broker to help you work through the nuts and bolts of not overpaying for what you actually value and want. Now, if one home is $10,000 more expensive, but another gives you $30,000 off up front, that's a $40,000 swing in your favor. Now, the bottom line is best upfront equity, Pulte. Best for lowest cash out of pocket, D.R. Horton. Best emotional perks, but weaker financially, Meritage. Weakest overall deal structure is going to be Mungo. Now, builder incentives can look similar on the surface, but when you break them down, the difference between these deals can easily be $20,000 to $40,000. That's why we don't just pick a house. We structure the best deal across the entire market. And it's why you hire a buyer's broker like me to run your numbers so that you can get the insights that you need to make a savvy decision when buying new construction in Myrtle Beach, South Carolina. Pick up the phone and give me a call. It's 843-360-1737.